Today we are going to talk about earned income tax credit and capital gain. So what happens if you qualify to claim earned income tax credit because your filing status is married filing jointly, or you are head of household and you have qualifying children, 1, 2, or 3, and your income is in the limit. So let's say your income is $25,000. So everything checks out. Your filing status is good, head of household or married filing jointly, your income is good, for example $25,000, and you have 1, 2, or 3 qualifying children. So all good, you're supposed to get a lot of money back. What happens if you also had your brokerage account like Robinhood, TD Ameritrade, Webull? So you made some transactions last year. In other words, you sold some stocks. I mean, transaction is when you buy or sell, but we are talking about when you sell stock, when you sell your shares. So because especially in 2020 and 2021, many people had stock brokerage accounts, and they bought and sold shares. So mostly, actually, I think people lost money, but some did make money, did make profit, capital gain. So what effect that capital gain has on your earned income tax credit? Like anything else, it depends. So if the capital gain is less than $10,300 for 2022 tax year, you're okay. But if everything else is good for earned income tax credit, but the profit, the capital gain from selling your stock last year was $10,400, unfortunately, you will lose that earned income tax credit. You will not get it. So I know it's already too late. If you sold it already. So there's not much we can do. It did happen with a couple of my clients in previous years where they completely qualified for earned income tax credit, but they could not get it because their capital gain was more than 10,000. I think last year was 10,000, 2021, and 2022 is 10,300. Actually, in previous years it used to be like 3,400 or something. So at least right now it's up to 10,300. So hopefully it helps, and you don't have to lose your earned income tax credit.